A lot of great information coming up. We're going to be talking about when can I retire? That's a question that I know you have in your mind, so let's talk more about that. We're going to be talking about trusting your advisor. What are some of those things that you should be paying attention to or listening to when you're talking to your advisor? What about the income laddered approach? What does that really mean and how can that impact your retirement? And risk on, risk off. What does that look like for your investments and how much risk you're really taking? So stay tuned as we've got a great show lined up here on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well. Plan to retire well.
Have you ever wondered when you can retire? Listen, this is a question we get asked a lot. Folks will come into our office, they'll say, listen, this is what I have. Can I retire? Folks, there's a lot of different things that have to be considered. The first thing that we have to ask is how much income a person wants. You know, what's the lifestyle they want to enjoy when they're in retirement? We've got to start with that because I got to have a picture of how much money that's going to be and what that looks like. The second place I want to go is I want to look for sources of income. You know, do I have pension income? Do I have rentals? Do I want to still work part-time? Do I have sufficient savings? I want to, Social Security, what's that going to look like? So I want to look for sources of income. Another thing I want to look at is debt. Am I going into retirement with any mortgage debt or any other kind of debt that might, you know, hurt my cash flow when I get into retirement? So we're going to have to look at that. And then again, savings. You know, how much did I put away in those IRAs, those 401ks, those 403bs, those 457s? You know, how much do I have there that I can count on? And then there's another factor we want to look at is health insurance. All right, if I'm not at the age of 65 and can receive Medicare, how am I going to bridge that gap if I'm stopping working and having health insurance? You know, where is that going to come from? So we want to look at that. Inflation. You know, I might have all the means to pull together a plan today, but with inflation, is it going to be able to keep up with it over time? If I live another 20, 30 years, the purchasing power I have today is going to look much different down the road, and maybe I want to be, you know, having that, you know, put into my plan as well. Income taxes, you know, if I've got all my money in IRAs and now that's the only place I can pull income from and every bit of it is going to be taxed, well, what does that look like, right? Or maybe I'm somebody that's fortunate enough to have other buckets of money, let's say non-qualified money or what's really called non-retirement money. Or how much do I have in Roth IRAs where I can pull and not have it be taxable? And what's my tax plan as I begin to take that income? And if it's all going to be taxable, well, isn't that going to affect things as well? Can you see that there's so many factors involved in making that decision as to whether you can retire? And so I can't stress enough, having an income plan is so vitally, vitally important. You know, you should be looking at this 4 or 5 years before you pull the trigger, just so you know what it looks like. Or if it has some deficiencies, you have ways to correct it as you approach that date. So if that's you, as you're approaching retirement, you're maybe 4 or 5 years out and you're wondering whether you can pull the trigger, then I encourage you, give us a call and we can sit down and develop some kind of a plan for you before you decide to do it.
When can I retire? What a great question, and something that I know is top of mind for a lot of folks, and we're sitting down with them on a regular basis and we hear that question of, okay, I've set aside this lump sum of money, now when is it that I can retire? And it varies for everybody, that dollar amount, and I know, Jack, you recently were talking with somebody down in the Cadillac office and wanted to share that story.
Yeah, you know, this started about 2 years ago. They came into the office and they said, when can I retire? And I actually love finding that answer because it's unique to everybody and everybody's situation. So we sat down and we just said, let's start with income. Can't have retirement without income. And so we started talking through all the different income sources that they had. They were about 60 years old and had a goal of maybe working a few more years. So once we solved that income problem, then we went to their assets and we said, okay, how can we best allocate these to attain those goals for a good retirement? We went through their healthcare plan. We said, we have to take into account how that's going to play in. And then we finished with some good tax planning. We got this all into place. They got a 3 or 4 year deadline. This couple is in their early 60s. They have about $200,000. And because of good planning and what they want to spend in retirement, they're ready to go and they're confident in the direction they're moving.
Yeah, I think what I caught from that, Jack, is that everyone's situation is unique, and a lot of times it comes back to what are your monthly expenses and everything, because I've, just like Jack shared, he's meeting with a couple that had a couple $100,000 saved. I've met with families that maybe have $2 million saved, and I have to tell them, no, you cannot retire because of the higher level of expenses that they have and the way that that's going to continue on for a long time ahead. And so the other thing that I thought that was helpful that Jack shared was looking at not just your assets and your income levels, but understanding health insurance and what those costs look like, as well as taxes and what implications those have. So if you're sitting there today wondering, when can I retire? We'd love the opportunity to sit down with you for a no cost, no obligation. Stay tuned, as we're going to be diving into trusting your advisor and in the income laddered approach.
NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best is Yet to Come, presented by Centennial Wealth Advisory. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on Wednesday, November 10th and November 17th from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700.
You don't walk into a doctor's office for some blanket prescription for whatever ails you. You expect individualized attention, a doctor who listens, and a treatment prescribed to meet your specific need. When it comes to your financial future, why expect anything less? If you would like an independent checkup from an independent advisor with access to hundreds of possible solutions to help you meet your goals, contact us today.
Hi, my name is Jack Klunder, and I am a financial advisor with Centennial Wealth Advisory. I work out of our Cadillac office, and we specialize in retirement planning. We take a very holistic approach. We start with investments and see how you're situated there. We do wealth management. We do income planning. We do tax planning, any kind of healthcare issues or needs that you might have for insurance. And then we talk about what your legacy plan might be. So if you are nearing or in retirement and you have questions that you want to go over, please give the number on the screen a call, and we can have and set up a free, no obligation consultation.
Hi, listen, in this segment, I want to talk about trust. I had a conversation with my wife not long ago, and I said, honey, as you look at the industry I'm in, how do you look at it? She's not in it all the time. I was curious. And she goes, Larry, if anything happened to you, if I was going to have to deal with somebody else, I'd want to make sure that person was informed. Okay, one of the things she mentioned too is, I'd want to make sure that they had my best interests in mind. And then she goes, and then if they give me advice, what if they're wrong? Right? What I found odd about this is it had nothing to do with education, which I thought would probably be the most important thing, you know, other than the fact that she wanted to be informed. It really boiled down to trust. She goes, you know, if you weren't around, I'd want to make sure that I could trust that advisor. You know, probably the best definition I've ever heard of trust is this. It's a consistency over time. All right, over time. You can't shortcut the time factor, right? You know, really for you to trust somebody fully, they're going to have been consistent with you over a long period of time before you really give them all that trust. So if that advisor doesn't have time to build that trust, you know, they're initially having a conversation with you, what should you do? Well, first of all, you know, you want to make sure they're using a third-party custodian. They're not the ones holding your assets. You know, think of Bernie Madoff, right? He held the assets and then he reported back to them. You don't want that. You want somebody else holding the assets, reporting to you everything the advisors do in the account. That brings integrity to the system. Maybe referrals. You know, the best leads I ever get is when somebody's coming from a referral from somebody else who's dealt with me for a long time, that knows they can trust me, feels comfortable referring their family, friends, or whoever the case might be. So that could be very important. If you're not coming to the advisor from that, maybe get some referrals. Do a background check. You know, make sure there isn't any negative history that broker or that advisor has. You know, that's really easy to do by doing a broker check with a FINRA. Disclosures. Read the disclosures. You know, that's where most advisors or brokerage companies and that are putting their conflicts of interest, and they have to disclose that. So read those. Don't just discard them. You know, what should advisor do in this case? Well, they should be able to recite their core values. They should tell you how they get paid. They should be able to share their experience, good and bad. You know, how'd they do through 2000 through 2002 with the tech bubble, or 2008? How regularly do they communicate? Very important. Is that going to be quarterly, or are you never going to hear from them, right? They should be able to show patience. You know, if you're going to know the good and bad about certain investments, then they should have the patience to be able to walk you through and educate you as to those. Are they independent? Are they just selling one company's products, or can they sell a number of companies' products? You know, my response back to Chris after all this was said and done, as we were talking about, you know, trust, I said, honey, I said, if anything should ever happen to me and you did have to deal with somebody, you know, one thing I would advise you, and I would advise you folks to do, is make sure your goals and objectives are been made very, very clear. Make sure that advisor that you're working with knows clearly what you want that money to do for them. And if you have to keep telling them, because that's, you know, you have to be able to trust that what they're going to put you in matches with what you want it to do. So hopefully you find this valuable. Trust is a key component to your relationship with your advisor, and if you don't have that, then I encourage you to give us a call.
The stock market has a natural life cycle that is destined to encounter peaks and valleys. Those scenarios are frequently preceded by events such as changes in interest rates, new international trade negotiations, treaties, and tariffs, fluctuating levels in the national debt, global events that threaten the economic stability, political controversies that impact national policies, dramatic news headlines that shape investor sentiment. While each of these issues, and certainly all of them combined, generate cause for concern, it's important to remember that we have been in similar circumstances before. One way to help gauge market-related anxiety is to consider observations made by renowned investment experts who have weathered many markets' ups and downs over the years. Contact us today for a complimentary portfolio risk assessment. We'd love the opportunity to help you plan to retire well.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
Hi, welcome back. Listen, in this segment of Chalk Talk, I want to talk to you about what we call the laddered strategy, okay? This is a way in which you can structure a portfolio to get the maximum results, especially if you're taking income in retirement. All right. First of all, what you want to do is segment a certain amount of money aside for just the first 5 years. Okay, so let's say I'm wanting to take 5% from a portfolio. Let's just use that as a general rule. That's going to be basically 25% of my portfolio. Okay, so I segment that aside. Now, because that's short-term in nature, because I need it in the first 5 years, how that's going to be invested is going to be highly conservative and very liquid, right? I might, in this environment, I might only get 1% on my money there, right? The second thing I want to do is then set enough aside for what we call the next 5 years after that, or the 6 to 10 years, okay? Now again, if I'm taking 5%, that's going to be another 25% of the portfolio. Now, because I don't need this in the first 5 years, I've got 5 years in which it can grow and then take income. How that's going to be invested is probably going to be, still conservative, but a little bit more different than what I had in the first 5 years, okay? In this environment, maybe I'm only getting 2 to 3%, okay, on my money. Now, if I've structured it this way, I've got half my portfolio, right? 25% in this bucket, 25% in this bucket, and so I've got half my portfolio very conservatively invested for my income in the next 10 years. Now, everything else can go into that 10-year plus bucket. Okay? Now, because I don't need that for 10 years, I can have it probably in a traditional growth bucket, which means it's probably taking on a little bit more volatility, but because I have time, I'm going to get a little bit more growth out of it, right? Now, for this example, I said, let's just use 7%. Let's say it's in that bucket, I'm getting 7%. Using the rule of 72, which is if I take 72, divide by any rate of return, it's going to tell me how often my money doubles. So if I take 72 divided by 7, it means my money is going to basically double in about 10 years. So if I use this money for the first 5 years, it runs out. And then from 6 to 10 years, I use the rest of that money. Okay, so then it runs out. And the rest of it's in this bucket, growing by 7%. I already know that it's going to pretty much double in that 10-year period. All right? Then all I have to do is turn around and take that money, take 25% of it, put it back here for the next 5 years, then another 25% here, and again, doing that every 10 years. Can you see how this could maybe make your outcome a little bit better, especially when you're taking income? I encourage you, if this is something you want to take a closer look at, then give us a call. We'd be glad to go over this with you.
I'm really glad Larry was talking about trusting your advisor, just as the word trust is so vital in relationships, and whether that's with your family, with your friends, with those that you work with, super vital when you're talking about your advisor and your retirement savings. I mean, that's something that you don't want to leave to chance. And so, Jack, I know it's something that we take very seriously here at Centennial Wealth Advisory, and something I know you want to talk a bit more about.
Yeah, definitely. It's one of those situations when people sit down in front of us, we don't have the benefit of a lot of that time, as Larry was talking. So hopefully I can maybe give you a couple little suggestions on what you might want to do to help gain that trust from that advisor. I learned this working on a board. We were interviewing for an important position at our organization, and so we had gone through all of the interview process. We had interviewed a lot of different people, and we asked a lot of questions. And a fellow person on our board looked at me and he said, all right, we're going to go back through all of those people, and I want you to say, what is your gut reaction? And I thought that was really helpful. We all went with our gut, with what we thought was going to be a good fit for our organization. So I think you can do the same thing with your advisor. Ask a lot of questions, get more than one opinion, and go with your gut. I think it's important to put all those things in place, and I hope that would be helpful for you as you process and try to build that trust.
Yeah, so true, and again, very important to be going with your
Yeah.
gut on that feeling. And the other area that Larry was talking about is this idea of an income laddered approach, and this is vital when it comes to your retirement plan, because you think about how you were in that growth and accumulation phase for all those years, setting money aside to get to that point of when you can retire, like we talked about earlier in the show. And now it's a matter of figuring out, okay, how do I structure this retirement savings to generate a regular, consistent income stream that you can count on? Because that's one of folks' number one concern out there, is running out of money in retirement. So this income laddered approach is a vital way that you may want to consider for your overall retirement plan. So as we're talking through those ideas, if there's certain things that caught your attention, we'd love that opportunity to sit down and talk with you in greater detail about that. Stay tuned, as we're going to be diving into risk on, risk off coming up next.
NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best is Yet to Come, presented by Centennial Wealth Advisory. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on Wednesday, November 10th and November 17th from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700.
Are you nearing retirement or in retirement? Have you had your portfolio just looked at or have a second opinion on that portfolio recently? Centennial Wealth is a full service advisory firm, and we have multiple locations in northern Michigan. I'm in the Gaylord office primarily. The office is right downtown Gaylord. Also up in the Petoskey office as well. That office is right off of 31. I'd love to hear your story. I'd love to sit down and chat, and it's a free, no obligation consultation, so just call the number on the screen.
Hi, listen, in this segment, I want to talk to you about risk. You know, when is it a good time to kind of maybe dial that up, and when is it maybe a good time to dial that down, right? Well, number one, you want to understand one thing. It's going to be one of three things. Am I trying to get wealthy? All right. If I'm trying to get wealthy, then maybe I'm going to want to have a little bit more risk, maybe being in those stocks. If I'm trying to stay wealthy, all right, I already have my wealth, I want to stay there. Maybe I'm looking at things like hedges, maybe hard assets, right? What if I'm just maybe just trying to generate an income, a steady income that I can count on? Maybe now I'm looking at fixed income or dividends, right? So understanding what your objective or goal is and what you're trying to accomplish is going to determine, you know, how much risk or what instruments you're going to put in place accordingly. Number two, what's my timeline? Am I 5 years or more out? I mean, as a general rule, that's kind of what you want to use. If I'm 5 years or more out from when I need my money, maybe I can take on a little bit more risk. If I'm 5 years or less, I'm going to maybe want to be dialing that down a little bit, right? So the timeline is very important. Three, what's my risk tolerance? You know, what is that amount that I could lose that's going to keep me up at night? Now, a lot of people like to go to a percentage. But, you know, for example, let's say I have $500,000 and I say to somebody, I'm probably okay, you know, losing 10%. What is that as a dollar amount? That's $50,000. That looks like a whole different thing, right? When I'm just talking about maybe losing $50,000 and being okay with it, right? So, you know, equating that, understanding that is very important. So understanding what my objective is, you know, am I trying to get wealthy, stay wealthy, or generate an income? You know, what's my timeline? What's my risk tolerance? And then another one, basically, you know, I want to probably get my personal finances in order. You know, before I'm talking about investing, maybe I better make sure I don't have any debt that I need to be dealing with first. Now, as a general rule, if I have debt that's, you know, interest rate of 6% or more, you know, I probably want to get that out of the way before I'm investing, right? If I have low interest, maybe not so much, but knowing that is very, very important. So folks, you know, looking at in the general sense, if I'm somebody that's trying to stay wealthy, you know, I'm going to need my income, you know, less than 5 years. I've got a low tolerance for risk, and I've got maybe some debt out there that's got 6% or more, high, you know, interest. That I would dare say I'm way over here on risk off, right? But if I'm trying to get wealthy, I've got greater than 5 years in which to grow that. I've got a high risk tolerance, and you know, I've got no debt. I'm going to probably be totally risk on, right? So, and then, or maybe I'm somebody in between. So understanding that, having that discussion and knowing where you're at is very important. If you're somebody that, you know, could use some help in that regard, then give us a call.
You know, I really appreciate what Larry did there, is that he really was getting to the point that planning can be powerful and proactive. One of the little stories that I'd like to share with you was an experience my wife and I just had. We got to go on a pretty crazy adventure down this mountain road. And as we were going through the mountain road traveling, we started to notice where there were guardrails, where they were not guardrails, and then the type of guardrail that they had up. So to give you an idea, there was some parts of this road that we looked at and we stopped and took a picture. We couldn't believe there was no guardrail right there. And then there were parts of the road where these guardrails, not sure what they were even protecting. Then the other thing that we looked at was the different guardrails that were on this road. You had some, these big cement barriers, steel, and then you had some that were a little fence pole with some barbed wire. And we were curious, is that considered a guardrail? It looked like that was the goal of it. Well, how does that apply to you? I see all the time. Clients come into our offices and they have no idea the risk that they're taking, or they're not taking enough risk. I've seen it on both sides. And as I looked through their plans, I thought, you know, we should really discuss and try to teach where your guardrails should be and where your guardrails should not be. So if you're second guessing, you know, where you're at, give us a call. Come on in. We'd love to do maybe what we call a red flag review. See if there's any areas that we need to change, and according to your risk, and really try to teach you how you might want to position yourself as you enter or are in retirement. I know there's some other areas that people really want to talk about their risk.
Yeah, so true, Jack, and I appreciate the visual of the guardrails, and specifically you're talking maybe more from an investment risk perspective, but what about those other guardrails to be paying attention to, like your estate plan? Do you have a will or a trust in place to navigate where those assets are to go upon your passing? Or what about from a tax perspective? Have you even looked at that? Do you even know that there are certain guardrails to be paying attention to? So a lot of different areas. So again, from today's show, as you're watching and have certain questions, we'd love that opportunity to sit down with you for a no cost, no obligation visit and help you plan to retire well. Thanks again for tuning in.